a pleasure to be here. I actually wanted to show you guys some slides, but inspired by this whole concept, I think I'm just going to not have any slides, and I'm going to do my very best to stick to the time here. So there's a total of 15 minutes. I hope to do it in about 10, and then do a bit of Q&A. Because I think the most helpful thing I can do, given what we have been through today and what's coming up, is really mostly to share my own story and the insights that I see from the network of startups that I look at every day. So a little bit of context here. So uNoodle, some of you may have already heard of this. It's a system for startup competitions. So basically any kind of award or prize or grant that you see either big brands or governments or universities, nonprofit foundations, all sorts of organizations are giving out effectively cash in order to engage entrepreneurs in various projects. So we have just specialized in that incredibly nerdy thing of how do we find these entrepreneurs, how do we select them in a transparent way so that it's fair for everyone, and help these big organizations give out what sometimes are millions of dollars in prizes. And some examples of those concepts, just so you know what I'm talking about. You may have heard of something that's called the Verizon Powerful Answers Award. Verizon is giving away $6 million across 4 different categories: education, transportation, healthcare, and sustainability to startups around the world. Many of you have probably not heard about this, and that's exactly why we should talk afterwards, because there are these amazing opportunities, and they don't take any equity, and they really just want to showcase and help you guys. So it is not an alternative to fundraising, but that's the world I come from. We've been doing it for 4 years. So the company has been through 2 different funding rounds. We did an angel round when we started, and we recently completed a seed round. So 4 years, of course, is a relatively long time. But when you're in such a weird space as we're in, it takes a little while to figure out what is actually the business around something like startup competitions. And I'm not here to talk about that. You can ask me afterwards. So for now, let's just assume that there is a business and that it is something I was able to raise funds on. Let's talk about the experience of fundraising seen from San Francisco where we're based, but certainly also seen from the data we collect about all these other tens of thousands of startups that go through the platform that are effectively looking for fundraising. It is indeed a very relevant follow-on to David Rose's talk, because we're not an angel platform. There are no investments happening on the platform, but effectively many of the startups that go through competitions and prizes and grants later on end up on places like Gust or AngelList or some of these other platforms that are out there to raise funding. From my own experience, I think I'll just share a couple of learnings that I had myself of going through this process. I think it's funny, it was so awesome to see the investors up here today. They're nervous, they're trying to stick on time and stay on topic, and they go one after each other. It's just a pleasure as an entrepreneur who so many times have pitched to see the investors go through the same thing. It's like, oh, I'm better than that firm over there. I need to really stress this and this and that, right? So it's a great concept. So I've been through the process, and I think the first thing it took me a little while to learn was this very, very basic thing about looking for money versus looking for advice. So many of you have probably heard this saying of investors who say, well, if you ask me for money, I'm going to give you advice. If you ask me for advice, I'm going to give you money. And effectively, it's very simple, but really there's a lot of truth to it that if you just go and pitch and say, hey, give me money, they generally very quickly will pass judgment on what it is you're building and say, well, okay, that's great, but it's not really me. But if you ask them for their insights and advice and network and recommendations, eventually you get them hooked, and they come back and say, oh, actually, you're onto something really cool. And why is that? Well, it's because fundamentally, and I think David was a great and is a great example of that. Investors only invest if they feel like they can add value. This is not a regular liquid capital market. It's a market where the investor says, I think there's something big here, but if I help them and we help them, this can really take off. So it's not just about the money, it's also about what they can add of value. And I think it just took me a little while before I realized to not just judge investors by other similar investments or the capital available, but certainly also about the advice and insights they can give. So the other thing somewhat related to that is that I learned that it pays off to do the research and understand and know your investor really well. Because you have investors that are different, obviously angels versus VCs and versus other types of capital, but you have different sectors, you have different industries, you have different geographies, you have different technology focuses. And there are even buzzwords that if those buzzwords are in some ways included in your pitch, they're much more likely to listen and understand what it really is that you're doing. So each kind of investor that you pitch, it's rarely the same pitch. If you do it well, it's rarely the same pitch. You know that investor and you figure out, okay, these are right for me because of this and this and that, because of that intro I got, because of this they've done before, because of this particular partner I'm talking to. So that research really is worth doing. I think there are, from my own background at least, I think it also, it's kind of a sales process. So it's really important to understand that it's not just about setting up some meetings and being, okay, great, we had coffee and I think I pitched well and so forth. It really is a sales process, which means you need to use all of the sales tools available. You need to use a CRM, map absolutely every interaction you have with every investor. You have to do all the research, as I mentioned. You have to make sure you follow up. You have to make sure that you present your case in just the same way as you would if you were selling your product. So many of the startups and entrepreneurs here are probably already in early sales. And you know that oftentimes you sell what you haven't built yet. So I have an engineering background. That's very uncomfortable. It's very uncomfortable to say, okay, well, here's what we have, when I really know that we don't really have it and we're building it. But that's what fundraising is about. You have to sell them on the vision and what you're trying to build and what the big opportunity is. So it really all comes from sales in that sense. And thereby not said that the salesperson on the founding team necessarily is the right person to raise funding. That's not what I'm saying. I think it's actually very powerful to be the technical person raising funding. But I think it's really important to understand the mechanics of the process. I think a fourth thing I've learned is that it's really important to know the timing of the fundraising process. And you would think, of course, well, I'm about to run out of money, so of course now I need to run and fundraise. And that, of course, is the worst possible time. So I'm not just talking about the timing in terms of your finances of your startup. I'm talking about the time of the typical fundraising windows that you see between September and December and February through about June. It takes a while to fundraise. Those of you that have done it know that it's rarely wrapped up in less than 3-4 months, and sometimes it takes 6 months. So make sure you don't run into like a dead period over Thanksgiving or New Year's or summer where no one does anything and all of a sudden you didn't get anything done and you're now very close to running out of money. So there's a timing of the year. There's a timing of where you are with product rollouts, with public launches. Anything like that should be very carefully orchestrated. And I think it's really, in some ways, it's like a choreographed dance. There's so many moving parts in fundraising. You also have to make sure the investors understand the urgency here. No one wants to invest in the people that no one else wants to invest in. I think David also touched upon that. Those deals are out there and investors need to move fast. And if you are one of those deals, you need to make sure that they understand that and they know that there's a sense of urgency and they know you're talking to others and don't oversell it, be honest. But make sure you don't undersell yourself, which especially us engineers tend to do once in a while. So from our network, when I look around the world, I think it's fascinating to see that fundraising today is totally different than fundraising was even just 5 to 10 years ago. So what we see is that entrepreneurs are now able to get much more traction, much quicker than they were before. So you are able to scale your technology. If you're a tech entrepreneur, you'll scale it on Amazon. You'll build out your marketing with one of all these tools that are available. You'll do your operations. Everything can be done with much less capital and much quicker. And that's great for the democratization of technology and access around the world to play the game of startups and tech entrepreneurs. But what it does also mean is that you're fundamentally global from day one. And there's going to be 1,000 others that are saying they're doing the same thing as you are. So rule number 5 in my book is if you have traction in the field you're pitching, lead with traction. So your pitch needs to lead with the traction you have because there are another 1,000 people that are saying they do the same thing. They're probably not as good as you. They probably don't have the same background as you. But really, the traction these days is so important, and that's why you also see very rarely early investments happen without traction in the tech world, because those are the ones that just have that extra oomph of they already got started and they already have this traction. A pitfall that I found with Unoodle over the past couple of years as we fundraise was, it's good to lead with traction, but if your traction is not what you're fundraising on, it actually could be a distraction. So what I mean by that is, so back in the day, we pivoted ourselves from initially we wanted to be Facebook for entrepreneurs, like a big social network, and we wanted to have all the entrepreneurs have their own profiles and network and everything to happen there, investment, collaboration, finding co-founders, basically the entire works that today we have probably 100 different sites that bear that part of the market, right? So we were very ambitious, and once we figured out that this narrow niche of competitions was really what we were really good at, everything else got so much easier. So the traction we had on the social network side didn't really help us raise funding for the opportunity that lies in competitions and all the data collected in competitions. However, our traction in competitions hugely helped us with the latest round of funding. So traction, if traction is exactly what you're doing and what you can really scale, lead with it. But if it's not what you're doing, you need to sell the vision and the dream. So I think what I'll do is, to not run out of time here, is to just for now leave it at that. Ask for any questions, anything I can share, either from my own experience in San Francisco or for the insights in our global data flow. Who has questions? Yes?
What's the best database to start competition?
There are actually not that many. We have one. You go to unoodle.com, you'll find a bunch there. There's a site called BizPlan Competitions, which lists competitions. There is a project over in London called F-Success that lists events of all sorts, startup events, hackathons, all sorts of stuff. So I'd say there are a range out there, but we're trying to collect at least the ones that are running on our platform are with us, and we're trying to collect others as well. If you find a better one, let me know. Yes?
So why did you pivot? What was the pivot?
So I think it's fascinating. Like us as entrepreneurs, we're so driven, and we always believe that what we have is going to change the world and it's going to be amazing. Otherwise, you don't have the energy to go through all the trouble that you're finding on your way. So we believed that was what the world needed. As young entrepreneurs, why is there no kind of LinkedIn for the startup funding world in some ways, right? Or Facebook for entrepreneurs, as we call it. So it just came out of that kind of strong belief that was what the world needed. But once you get into implementation, once you realize what else is out there and how hard it is to lead the investment side, the networking side, the career hiring side, the co-founder matching side, like all of those have today their own sites, and there's a reason for that. It's really, really hard to do it well. So at the end of the day, it came down to focus. And I had to give up a number of pet projects that I had, basically built from scratch, part me, part with the team, where we just had to say, like, we can't do everything. And we chose competitions because of that global reach and because of that fundamental drive that, as I said, we all have. We all think we'll win. So if you present me with a big prize, I'm going to believe that I will win that prize. And the other 1,000 will believe that too. So from where we're standing, it's a great way to engage entrepreneurs all around the world. So that was fundamentally why. It was a question of focus. Yes?
You mentioned just now certain things are much harder than you'd ever think they were. And meanwhile, there's an awful lot of conventional wisdom around everything being so easy.
Right.
Open source and everything else.
Right.
What have you found to be some of the areas that end up being easier than you think and harder, or easier than most people think and harder than most people think?
So that's a very good question. How many of you have heard of the concept of survivorship bias? That Nassim Taleb, the guy who did the Black Swan and predicted the financial crash and everything else. So for those of you that haven't heard of it, it's really very simple. For all the deals that go well, there's another 10 or 100x that don't go well, but we don't hear about those. So as entrepreneurs, we have this rosy idea of, everyone around me are magically successful, and that's all I read about, and huge exits. And especially during these times where there's a lot, whether it's a bubble or not, there's a lot going on. So we're very kind of colored by that. So in our case, or in my case, I think the the parts that were harder, there's really not a lot that was easier. It's basically hard work. The parts that were harder, I think, was putting together the right team and motivating the right team and dealing with that chicken and the egg problem of, in order to get the right team, you have to fundraise or make a lot of revenue, but you can't really make a lot of revenue and or fundraise without having the right team together. So that kind of disconnect that really just takes a lot of motivation and getting everyone in the same boat was really hard. And I was thinking, you know, I've always been very passion driven. I was like, well, if everyone else is passion driven, I just need the problem. Let's just get in the same boat and do this. But it doesn't work that way. I mean, for those of you that work for startups that aren't necessarily founders, like you'll know that you're worried about what's my upside and what's required of me and how likely is this to work out and how much runway do you have and all of this other stuff that you need in this calculated, I guess, a decision that you make whether you want to be part of the startup. That was definitely harder. And I think given our pivot, I think it's obvious it was also harder to build Facebook for entrepreneurs because otherwise we wouldn't have pivoted. And there are probably another 10 things I could point to that are harder. I can't think of anything that was like shockingly easy to do. Actually, yeah, I'll say one thing. So 4 years ago, running on Amazon as a way to scale your operations was not really that common. And it's really grown fast, how recent it is that people scale everything on cloud platforms. And I was very pleasantly surprised of how easy it actually was to build a global operation. In operations wise, compared to the past where you'd have to like have your own colo with servers and all this hardware you had to invest in. Or like it's not that long ago. It's like 5 years ago, and I think that was really for me. I was like, wow, this is easy. I think there's a number of other tools out there that are helping you. Thank you. Appreciate it.